Good morning YouTube, welcome to the channel. If you don't already know, my name is Henry and I make videos on the stock market and investing in general. In this video I'm going to be giving an update on my Trading 212 investment portfolio, which as you can see at the bottom here currently stands at £12,303 with a profit of roughly 2,400. I'm going to be running through some new buys this week, a stock that I have sold, some dividends that have been paid, and also what I'm looking out for moving into next week. I release videos on a regular basis, so please hit that subscribe button to keep up to date with this portfolio and also my views on certain stock picks and the market in general. Please also comment below any thoughts and questions, it's great to hear other people's points of view. Otherwise, let's get straight into the video. So as always with these portfolio update videos, let's see what's been happening with the market as a whole over the last week or so before we jump into the Trading 212 app to get a detailed view on the portfolio performance. So this is the chart of the iShares S&P 500 tracker, which gives a fairly accurate representation of the overall market. As you can see here, we've edged marginally higher over the last week or so, but have been in more of a consolidation phase over the last 4 weeks from mid-June, roughly here, 18th of June there, till now. Of course, whilst we'd always like the market to fly higher, I'm not too disappointed with the current trend, given how quickly the market has shot back up from its lows in March all the way up to where it was by sort of the start of June. And I think we needed a period like this to consolidate those gains. I think the longer these share prices are maintained or start to edge higher, the lower the risk of a second market crash, as people begin to feel more comfortable with the level these stocks are at, and as the easing of lockdown starts to take place both in the UK and across the world. So with that said, let's dive into the Trading 212 app and have a look at how each individual stock has performed over the last week or so. So just to recap on the week, you can see here it's been fairly flat. We started the week at 23.85% profit, £2,320 up. We did have a spike in the week where we were up to 26.5% up. That quickly fell away, and then it's been pretty steady for the rest of the week, and we finished roughly 0.5%, 50 quid up on where we were at the start. So pretty flat overall. One of the interesting things that's happened this week is some of the high-flying tech stocks which have been outperforming my portfolio and really driving some of this profit have actually fallen back slightly this week, and some of the industrials and the financials have actually been boosted slightly to maintain that level of profit, but it's good to sort of balance out the portfolio and share that profit margin between a greater number of stocks, so I'm not as heavily reliant on my profit margin on a few of the tech stocks. It's actually the first time in my portfolio since I started this roughly 3.5 months ago now where every single stock I own is currently in the green. So if we just have a quick scroll down and we'll have a look at the allocations, you can see here every stock is actually in the green at the moment. The ones I've struggled with over the last month or so, Coca-Cola's been down quite a lot, that's now 1.5% up. InMode was down this week, that's now 25% up. If you watch my last video, you'll know that I'm really keen on that as a growth stock. We keep going. Taylor Wimpey, the newest position in this portfolio, which I will go through in this video, is up, and that's been fluctuating from a couple of percent up to a couple of percent down. We have finished the week very marginally in the green, which is good. And if we go down, and we'll just start by having a look in the portfolio allocation, something that I've been working on. I'm actually really happy with how this is starting to pan out. So if you'd watched my previous videos, you'll know that I'm really keen on having Tesla and Amazon as two of the top holdings in my portfolio. Previously they were down probably 5th and 6th place, maybe lower. They're now two of the top 4, which is great, and that is largely because both have grown, especially Tesla, which is up from about 4% of the portfolio to close to 6. It was actually above 7 at one point this week, but I did trim the position to take some profit off the table. So yeah, happy with the weightings. No stock over 6.26%, so I do feel like my risk is balanced. Although I do have a good level of conviction in every stock I own, I do feel a lot more comfortable when these weights are balanced. So we'll just have a quick scroll down here. You can see my ETF high dividend yield is near the top, so that's balancing some risk. Dark group airline stock mixed in with Segro, Tritax Big Box REIT down the bottom there, which are obviously my REITs, mixed in with growth stock financials. Taylor Wimpey, my new position, is already up to 3.11%. I've been building that quite heavily, as we'll have a look at. And we scroll down and you'll notice the vast majority of The lower weighted stocks are dividend stocks. So you've got banks, Bank of America, Barclays, Bank of Montreal, Unilever, AT&T and Johnson & Johnson are all dividend stocks, and they are the lowest weighted in my portfolio, and that is done on purpose. This portfolio, as you'll know if you've watched this channel for a few videos, is aimed at growth, is aimed at capital appreciation over dividends. I do like dividends, I do want a proportion of them in my portfolio, but they are lower on my agenda and they are hence weighted lower in the portfolio. So let's go back in and have a look at some of the individual stocks this week. So 3i has been pretty flat. Alibaba has been doing really well. You can see over the last month or so it's flown up from where I bought it, roughly $200 a share. The Chinese market has been booming and it reached $261, so a really good spurt it had there. It's pulled back slightly to just below $250, but I do see it consolidating at this sort of level, if not kicking on again further. So I'm currently up 20%. At one point I was up nearly 30% in this stock, which was great, and this is one that if it pulls back a little bit more, I'll probably be adding some more shares to my position. Moving down, Alphabet, Amazon, Apple, as I said, they've all pulled back a little bit this week. They're probably 1 or 2% down, but overall I'm still in a really healthy position on them. I did manage to get them at really good prices in the sort of March low, so I'm happy with those positions. If they do fall back again next week, I'll probably start to add to those positions. AT&T, as I mentioned, is obviously a dividend stock. It pays a really healthy 7% yield or thereabouts, just short of 7%, as you can see here. It's a stock that I'm not massively keen on just because they carry a lot of debt, but that yield is just so attractive. I told myself if it falls below $30, I will start to initiate a position, and that's exactly what I've done. So if we scroll down, if we look down here at the history, you'll see I have bought one share on 5 different occasions now. Each time, my average price, 29.58 there. We'll just look at a few, 29.74. And you'll see here 29.92. So every time I bought, it's been under that $30 mark. That is the price I'll buy NT. I will not buy it if it goes any higher, just because I don't have an awful lot of conviction in the stock, but that dividend yield is just so attractive. I thought it was worth initiating a really small position for the portfolio. Balance stocks have been pretty stable. Bank of America, Bank of Montreal, Barclays have been okay. Again, they're in there for dividends and they don't make up a massive percentage of the portfolio. Coca-Cola is another stock I hold for dividends, same with Comcast. Both have been performing okay, but they're not stocks that I'm particularly looking to add to at the moment. I am prioritising other stocks slightly higher. Dark Group is a stock which, if you watch my last video, you'll know is one of 3 stocks I think could double over the next year or so, along with Taylor Wimpey and InMode, which we'll mention again in this video. It's currently trading at 713 pence, so £7.13 a share. It did have a pullback down to the mid-60s this week, and if we just have a look at my history on this stock, you will see that I did buy when it reached 640, only a couple of shares, just to bulk up the position at that slightly lower price point. And this is a stock that I see going back above 1,000 pence per share, £10. It did reach in June this year, and I think towards the back end of this year, when people start booking holidays again, the stock will get back above that level, and I'd like to see it push on towards 11 to 1,200 pence, which would be £12. At which point I would be roughly 150% up on the stock, which would be fantastic. Moving down, Facebook again has pulled back slightly. Illumina has been pretty stable. InMode is the other one I wanted to focus on this week. As I mentioned, another one of the growth stocks that I see doing really well over the next 6 months or so. It had a big pullback from its highs in January of roughly $50. It's been steadily increasing since. Similar to Dark Group, it peaked in early June before falling back below $26 a share. Again, if we go into the history, you will see that I bought a couple of shares under $26, 25.49 and 25.4. You can see there. Again, similar to Dark Group, just to bulk up my position whilst the stock was at a slightly lower price point. So I'm really happy with that. And since then, you can see that it's bounced back all the way up to $34 a share. I think this one will continue rising up into the 40s and hopefully towards $50 a share. And hopefully push me up towards 100% gain on this stock. That is my target price. If it gets towards $50, $55 a share, I will consider whether to take profit on this one or not. But I do think it's a really good opportunity if you're looking for a stock to really add capital appreciation to your portfolio. Moving down, S&P 500 has been stable. Johnson & Johnson is only a small position, has been pretty stable. Same with JP Morgan, same with McDonald's, same with Microsoft. Keep scrolling down. The other stock that I'm really keen on at the moment is Square. If we look into Square, go into the last year, you'll see it peaked at $133. It's kicked on from its lows of down at under $40 a share, so it's more than 3x in the last 3 months or so. I managed to get in at roughly $65 a share. I've added slightly more to that position since, which has pulled up my average price up to 67.5. This is a stock that I see being huge moving into the future. I would like to build a bigger position in this stock, but I just think it's slightly overpriced at the moment. I'd like to see it pull back down towards maybe $100 a share, at which point I'll probably be piling back into this stock and adding a lot more to my position. If you're interested in this stock, have a look on my channel. I did dedicate a full video to Square in this stock and did a full analysis on it. So if you're interested, have a look at that, and hopefully it'll assist you in making your mind up as to whether it's a stock you want to invest in. Taylor Wimpey is the other one I wanted to mention today. This is the newest position in the portfolio. It's a stock that I've been building a position in over the last couple of weeks or so. I think it's really undervalued at the moment. I think the UK house builder market in general is only going one way into the future. There's still a demand, supply and balance. Taylor Wimpey are a good company with good profit margins and a healthy balance sheet, and I think they're well positioned to take advantage of that. And over the next 12 to 18 months, I can see it getting back up to its highs of roughly 230 pence per share, which would be £2.30. So again, if we scroll down here to history, you can see I've been gradually buying shares of Taylor Wimpey over the last couple of weeks. So I first bought 50 shares here, then 25, then another 25. Over the last couple of weeks, I've just been adding 10 shares here and there, trying to bulk out a position, trying to get a decent average price. I think the lowest I bought Taylor Wimpey at was roughly 136, 137 pence. The highest is about 145, 144. It's averaged out at roughly 141 so far. If I can build a position of roughly £500 at an average price of 140, I'll be pretty happy with that. Next is Tesla, one of everyone's favourite shares. It's absolutely flown, of course, over the last couple of months. Early this week, I was in two minds with Tesla just because it flew up so quickly. As you can see here, intraday high of $1,766, which was huge. It fell back pretty quickly from there. I think a lot of people realised it just got too hot even for Tesla, and it settled around 1,500. I was in two minds with Tesla. I am a long-term believer in the stock. I do want a bigger position, but I did feel that price was just a little bit too steamy, and as a result I did actually sell a small proportion of my position just to take advantage of that share price. If we go down here and look into history, you can see I sold 0.03 of a share, which is such a small amount that it was worth £41. I just took some of that froth out of the stock, took some froth out of it. You can see here it says the result was £23. As you can see, I sold at 1,736, and I could buy that 0.03 of a share back now at a slightly lower price if I wanted to. But I'm just going to keep a watching brief over Tesla for the next week or so and see what happens with that share price. It is still pretty punchy for the revenues and profit margins, but Battery Day is coming up, and there is talk about them being put into the S&P 500, which again could kick that share price on further. So I'm just going to sit tight for now and see what happens. Moving down the list, the rest of the stocks are pretty stable. Tritax is stable, Unilever is stable, and then my ETFs and Visa as well. So overall, I'm really happy with the portfolio. Everything's in green, so I can't complain. It's been a pretty steady week. I have got some more funds now to invest, so I'm just waiting for the right opportunities to come up. If we have a big red day, I will be deploying some more funds. So that's just about it. Please hit that like button if you took some value from the video. They do take a lot of time to make, so your support would be really appreciated. Hit that subscribe button as well to keep up to date with this portfolio, what I'm buying, what I'm selling. Hopefully it'll give you some ideas, or at least give you another person's perspective on certain stock picks and trends. Let me know your thoughts in the comments. It's always good to hear what other people think. Otherwise, I'll see you in the next one.